President Biden arriving in Italy for the G7, where world leaders who are going to be discussing the Russia-Ukraine war, including a proposal by the United States to use earnings from frozen Russian assets to help Ukraine. Joining me right now in an exclusive interview this morning is Treasury Secretary Janet Yellen, who has a big op-ed in the New York Times about this very issue. So we'll go there first, and then there's about 100 other questions I want to talk about the economy and where we really are.
Happy to.
It's great to see you.
Thank you.
Explain your plan and in terms of what it means economically to try to support Ukraine.
Well, I think Ukraine needs to know that the allies are committed and able to support Ukraine for the long term. Russia looks like they're trying to wait us out, hope that we'll lose our resolve. And we want to take a step that will provide significant funding for Ukraine and show that we have the capacity over the long run.
But the big idea is to take the frozen assets and the earnings that come effectively off of those frozen assets and effectively create a loan against the earnings that come off the frozen assets without providing the frozen assets themselves to Ukraine.
That's right. Almost $200 billion is impounded, frozen in Belgium at Euroclear. All in all, we think there are about $280 billion, but the biggest chunk is at Euroclear. And those assets are generating a return that does not belong to Russia. The assets are just in cash, but Euroclear is able to itself earn interest on these funds. And already the European Union has taken the step of agreeing to take that flow of, they call it windfall profits, and turn it over to Ukraine. And that could be somewhere in the $3 to $5 billion a year range. But Ukraine's needs are bigger than that. And given that the leaders have committed, these assets will remain frozen until Russia has ceased their aggression and paid for the damage they've caused to Ukraine.
So, of course, the bigger question
that we're going to make a loan.
Right, but why not just take the frozen assets themselves? You think that legally you can't?
Well, our view is that it is legal, moral, and economically reasonable to seize the assets. But what we're looking for is to keep the allies together, to find a way to do something jointly in a way that is agreeable to all of the partners who've been supporting Ukraine, the G7, to Europe, to other countries that are part of our coalition. And this takes the economic value in those assets and gives it to Ukraine in meaningful amount. The numbers being discussed are something like $50 billion, and this could be repeated.
Let's move the conversation back to the U.S. for a moment.
Okay.
I'm curious about what you think is happening on the ground in terms of our economy, in particular inflation. I'm not going to ask you to comment on Jay Powell because I know you don't like to do that.
I won't do that.
But we heard his perspective yesterday and his idea that, there might be one interest rate cut on the table, maybe. But there's a larger question about where we really are in the journey on taking inflation down. There were some good signs, but there's still parts of the economy that still are hot.
Well, we're creating jobs at a very rapid pace. But at the same time, the unemployment rate has drifted up a little bit. It's still extremely low in historic terms, more or less the lowest in 50 years. But the labor market has become a little less hot, a little bit more normal. The number of job openings has declined some. We've had a burst in labor force participation. And so the labor market now is resembling what it looked like pre-pandemic. Wages are increasing, but at a slower rate. And so that doesn't really look like it's a threat to inflation. A substantial part of the inflation we still have, inflation has come down dramatically, but a substantial part has to do with the housing market and really reflects the fact that it takes time when market rents go up for people who have rental contracts to see, over time, their rents go up too. But that takes a while. And so a significant share of the remaining inflation represents the slow return of housing costs.
So on the housing front, though, how concerned are you that both it's harder for young people, obviously, to get into a home? That's a real issue.
Yes.
But there's another issue that may be here for a long time, which is the idea that people who own a home are trapped in the home because they can't sell the home because of mortgage rates. And as a result, what that does both to physical mobility, but also to economic mobility in the country.
Well, I agree with that. And because interest rates were so low, many people don't want to sell their homes or move because they're faced with taking out a mortgage. How big a problem
is that, as somebody who's thinking about running our economy, which is your role?
President Biden made a proposal in his most recent budget that he would give $10,000 both to first-time home buyers looking for moderate-price homes, but also to people who, as you described, are locked in their homes and need an incentive to sell them. There is a substantial lock-in effect there that's